Welcome to the Lowdown Mortgage Podcast, the show where we dive deep into the topics that directly impact the evolving originator. I'm your host, Connor Bartley. Bam! And joining me today is someone who doesn't just process loans, he educates, empowers, and actually shows up when it matters. His clients talk about how he's consistently available, breaks down complex lending processes in ways people actually understand, and provides the kind of support that turns first-time home buyers into confident decision makers. Jarad Brown, welcome to the Lowdown.
Thank you for the introduction.
Yeah, man, absolutely. It's always a pleasure to have people on this. I'm excited to talk with you today. I know this audience of kind of evolving originators will love what you have to say. It's been great getting to know you kind of leading up to this. And just for context, to kick things off, help me understand kind of where you're coming from in the mortgage business, how you got into this, why you stay, and what does like mortgage mean to you?
I lucked into it. I lucked into the mortgage business. Out of college, I knew I wanted to do something in finance. I've always been great at math. Finance made sense to me. My grandfather was a huge influence on that. He worked for a small bank called Citizens and Southern Bank, CNS Bank, for 45 years. So I was raised in and around finance. Coming out of Georgia Southern, I knew I wanted to do something in finance. Wasn't sure exactly what it was. And straight out of college, I got into retail banking, which I realized quickly that I didn't want to be a retail bank manager. I had enough retail management at Abercrombie and Fitch. I didn't want to stay in retail management. And so became financial advisor, got my 7 and my 66 and hated it. Hated every minute of it. Wasn't really self-assured. Think that I knew better to do at 24 with people's money than they did. They spent a lifetime creating the wealth, and I didn't think that I had better ideas than they did. And so became really jaded around finance, and actually decided to follow a passion of mine. I asked my older brother, he was in med school at the time, what I should do. And he's like, well, what do you want to do? You're young, not married, no kids. He's like, what do you want to do? If you could just do anything. I was like, I've always kind of wanted to be a firefighter. He's like, then what are you doing? Go do it. I was like, yeah, I got a finance degree. I can't go be a firefighter. He's like, go do it. And so I did and loved it. Absolutely loved it. It was my calling. I followed a passion and I enjoyed every minute of it. The brotherhood, fighting fire, putting on a Superman costume, walking into a burning building, putting wet stuff on hot stuff. It was awesome. Loved it. But then came, a marriage, my first kid, Miles. We bought a house, all the things. And I realized quickly that I wasn't fulfilling what I needed to fulfill as a father financially, that I, had more talents available. I needed to put those to work to give my son the best life I could. So I interviewed for this position, what I thought was going to be part-time. I didn't think I was going to leave the fire service, but interviewed with Christy Sukamnet, who is my mentor, still is today. We haven't worked for the same company in almost 6 years now, but she's still my mentor. Interviewed for the job, and she told me that unfortunately there's no such thing as a part-time LO. And I was like, oh, that really stinks, because I'm not leaving the fire department. Love it. I just needed something to kind of bridge the gap there. And so the interview ended, and about a week later, she called me and she's like, Jarad, I can't let you do this to yourself. She's like, what are you making as a firefighter? And I lied. I think I was making like $38,000 a year at the time. I told her 45,000. She goes, well, what if I can give you that over the next 6 months? And I was like, so the equivalent of $45,000 a year over the next 6 months sounds great. She goes, no, 45,000, come in, forgivable draw. We'll get you licensed, get everything going, send you through Xenex. And then if after 6 months it's not working out for you, go back to being a firefighter. At the time, I was rolling nickels to buy diapers because I'd already rolled all the quarters and dimes and spent them. I was down to nothing but nickels left. And so I was like, yeah. Went to my fire chief, was like, hey, I'll be back in 6 months. This dumb broad is about to pay me $45,000. Come do some mortgages or something like that for 6 months, and I'll be back. And obviously, I'm still sitting here today, 12 years later. Forever grateful to Christy Sukamnet for not letting me walk out of that interview empty-handed, for having the faith in me and pulling me in. I still miss fighting fire, but I still get to put out fires as a loan officer. They're just different types of fires.
Yeah. Well, I love that story. A few things that really stand out to me is one, someone took a chance on you. They saw the potential. They did what they had to do, and then they developed that potential into talent, right? And then two, I also love that you mentioned that you guys don't work at the same company, haven't worked at the same place for a while, but you stay in touch and you continue to collaborate, and she's still a mentor to you. And just for anyone listening, I think that there's a real lesson in that, to get outside of that company bubble, to kind of not be afraid of other loan officers at other companies, but to hear their take on things. Because I think if we get too ingrained in sort of like the corporate culture and the way it gets done at one place, we might miss out on some really great ideas. So you get into the job, she takes a chance on you, and then when did you realize, hey, I'm pretty good at this. I'm going to make this sort of my career for the future.
Yeah, I mean, the $45,000 over 6 months, like I was steady Eddie there, but I wasn't immediately successful out the box. It took time, and that's one of the things I tell a lot of loan officers when they get into the industry is, how much savings do you have? Do you have another means of income to get you through? Because it was a slow build, and there were times that I thought about going back to firefighting because it just wasn't going to cut it. It was my first $1 million month. The first month where I closed $1 million, I was like, okay. So based off the comp there, I was like, this is 3 months worth of work, done in 1 month. So if I can string four of these together in a year, $4 million months in a year, then I'm making what I was making over there. And if I can do five, then I'm doing better, right? And so when I did my first $1 million month, I got great advice from my brother. I was explaining comp to him and how we were getting paid on it. And he's like, so roughly, if you close $1 million, that's going to be, $10,000, right, of income. I'm like, roughly. And he's like, blow 1,000 on you, not towards your kids, not towards your wife, not towards anything else. Something that is just for you, spend $1,000 on. And his reasoning behind that was, it'll make you want it again. It'll make you hungry for it again, right? Except for not every time you close $1 million, blow 1,000 on yourself. That's really self-serving. But he said, set milestones for yourself. And so I did it at 1 million. When I hit 2 million for the first time, I spent $2,000 on myself. When I hit 3 million for the first time, I spent 3,000 on myself in a totally selfish way. But it made me hunger for that next milestone. And I've done that every single time I've hit a new record as far as millions per month, right? I'll blow the percentage of that on something totally self-serving, totally selfish, but then it makes me hungry for the next milestone. And I never went back. Like, I think after I hit 1 million, there was like a month, like 2 months later, that I hit under 1 million, but that was it. From then on, I was $1 million every month. And then when I hit 2, it was the same, stayed consistently there. So building the business in the right way, rewarding yourself, not just waiting on the company to reward you for your job well done, but recognizing what you've accomplished, rewarding yourself for that so that you can be hungry for that next milestone.
Yeah, I think that's a really smart way of doing it. I love the stair step way that you do it, and as you hit the next milestone, I mean, it's a bigger prize, right?
Yes.
And you can start to imagine what would I get with that money, and what does that mean, and it becomes a really tangible goal. I think that's great advice. Over the years, you've served a lot of people. Clearly, you've been successful with the $1, $2, $3 million months and growing. Is there a loan, like a particular file that still resonates with you today? That's just that constant reminder of, man, this is why I love what I do.
Yeah, and it happened pretty early on in my career. And I'll leave her name out of it for her own privacy. She was in the National Guard. She was a reservist. And I needed a letter of continuance because her ETS date was coming up. And she went to her CO to get it, and she wasn't eligible to reenlist, which was going to screw up the deal. And she had been in for 7 years as a reservist. It was going to screw up the deal. And the reason she wasn't eligible to reenlist is she had failed her PT test. They have to run 2 miles as part of the physical training for the PT test, and she had failed it. And we were a week out of closing. I talked to her CO, and I convinced him to allow her to try it again. Try it again. And so we met at a local park, Lake Mare in Savannah, and I was there for her PT test. Did the push-ups beside her, did the sit-ups beside her, and then we ran. And he let me run it with her. And we ran the whole thing, and she passed her PT test. There, later that day, he gets back to the office, and he writes me the letter stating that she's eligible to reenlist. We close on the home. She gets the home. And she called me about 3 years later, still enlisted, has passed the PT test ever since then, has no issues with it. And I've done 2 houses for her now. But talking about the links that a lender will go to,
Yeah.
getting out and going the literal extra mile with my client to make sure she got it. But it was a huge accomplishment. And had she not passed the test, more importantly, not just getting the home, had she not passed the test, she wouldn't be enlisted anymore. And she gets so much value out of being enlisted, and obviously buying a house back then has helped her wealth, helped her, on that side of it as well. But she ran so hard for me. I was running it backwards there at the end, like, come on. And I had it on my watch. I knew, I was like, all right, we got a quarter mile. We got to get. So no, that one sticks out. But really, I mean, there's countless over the last 12 years. Some of the ones that I like the most are when you get older clients that are buying their first home, that just never knew that they could afford, right? But have done the right things. They've been on their job for 20 years. They got the credit. They've been paying rent, and they should own the house that they live in with how much rent they've paid, right? Those people, and them getting that, home ownership, that thing that they never thought that they had, their first generation homeowners, those are the ones that really stand out to me. And typically they're the smaller loans, they're not the $2 million, 800 credit score, putting 20% down loans, but they mean more. They fulfill me in a way.
What are the aha moments that people like? What are the things, the misconceptions that they discover where they go, oh gosh, like I probably could have owned a home 20 years ago? Like, what are the things that are in their heads that you as a lender help them realize, hey, yeah, it's not that way. We can still do this. Like, what are some of the more common things that hold people back?
What I see, especially down here in Georgia, is a lot of, it's the good old boy, like they've never borrowed money. They don't have credit card debt. They don't have installment loans. They spend cash. They save up until they have enough to buy it, and they buy it. So they don't understand how credit works, right? Which is great because their debt to income ratio is typically pretty low, right? Not knowing that they can tap into their 401k, borrow against their 401k, this money they've been setting aside for retirement, reallocating those investments from their 401k into real estate, right? Because a lot of people, especially these days, are living paycheck to paycheck, right? And they're keeping all their bills paid, keeping their head above water, but they don't think they have capital because they can't see it, right? They may see their 401k statement once, twice a year, but that money that they're setting aside for the future, most people don't know that they can tap into that when buying a home in a lot of situations, borrow against that money, take their money out of their right pocket, put it into their left pocket, and have a home. A lot of people, and I don't understand how or why this misconception is still out there, think they need 20%. I need to put down 20% to buy a home, And there's so many down payment assistance programs, so many grant programs, that you can put people into that they don't know exist. They just have it in their head. Their parents didn't own a home. The grandparents didn't own a home, that they too, they're not going to be able to own a home, right? I always tell people that having income, having stable income is the hard part. Waking up and going to work every day is the hard part, right? Everything else I can work through as a lender. If it's credit issues, we'll work on credit. You've been on earth X amount of years. What's one more year working with me to get the credit to where it needs to be? You've already done the hard part. You got a job. You've held down the same job for a while, right? Waking up and going to work is the hard part. Everything else I can fit.
Yeah. So on one side of the business, you've got your borrowers, the people you're helping get into the home. But then the other side is the business partners, your referral partners, agents, whoever else you might be working with on the referral side. How are you taking care of them? Because you strike me as a guy who does a great job of taking care of people. So I'm just curious, like, what's the value that you're bringing to your agents or referral partners?
Yeah, absolutely. Well, first, I think it's important to work with people that you want to work with. Work with people that excite you. Work with people that motivate you just as much as you're motivating them, right? We see these referrals as kind of a one-way street in a lot of ways, right? It's going to be the realtors giving me buyers. Every now and again, I can pass one back, but for the most part, it's them sending me business. So I need to make sure that anybody that I'm working with, I want to work with, that I have a real relationship with that person, a friendship with that person. And so I need to make sure that I get along with them, make sure that I want to pick up the phone and call them. I've worked with people in the past that it's like, it's Tuesday. I've time blocked for this. I need to reach out to this person. I think we all have referral partners that, we're like, well, let's get this one done. I learned pretty early on in my career to only work with people that I want to work with, and that also want to work with me, because I have to trust them. I have to trust that the information they're telling me, I have to trust that their communication with me, I have to trust them just as much as they have to trust me to get the deal to the closing table. And so, as far as taking care of them, most of the time it's checking in. It's checking in on their personal life, it's checking in on their goals. We're recording this on the 24th of November. Right now is business planning time, right? I know I always have my business plan set up and printed and on my desk before Thanksgiving. That way I can, do Black Friday remotely. And so I talk to my realtors every year about that. So how do you feel that you did this year? Did you hit your goals this year? What are your goals for next year? What are ways that I can improve what I do for you to help you hit those goals if you didn't hit them? And if you did hit them, let's celebrate and let's set them twice as high next year, right? So having that communication and letting them know that, you're invested, interested in their success. I work with a small handful of realtors that I've worked with for years. And we have a trust and communication between us that, if there's something they need from me, or if there's something that I'm not bringing to the table, that they can come directly to me with it, tell me where I can improve. And if it's something that's out of my hands, if it's something company wide, that I can then take it up the ladder and, make it to where it fits into whatever their business model is, so that they can hit their own professional goals. But it goes beyond that. It also supporting their personal goals. Anytime I do my business planning, I have my personal goals. Like this year, it was to run 420 miles. I wanted to run a half marathon. I wanted to maintain weight, and I've hit all my personal goals. So I always make sure I ask my realtors, my referral partners, what are your personal goals for this coming year? Understanding what those goals are and helping, will deepen the relationship, tie them in even tighter, because especially in a market like the one we're in, personal goals become something that are achievable when professional goals are not achievable. If they maybe fell short on the number of units that they wanted for this year, yeah, well, did you hit the other one? And how can how can I help you hit the personal goals? And if we're going to miss that, and it matters, that balance matters. It matters in our lives, but it definitely matters in the lives of our realtors.
Yeah. So, side note, just because I'm curious, 420 miles, how many pairs of shoes do you go through running 420 miles?
Not enough. Not
Yeah.
enough. You're supposed to switch them out a lot more often than I do. I've run holes in shoes,
Yeah.
but I'm getting better about it. I think in the past year, I've had 3 pairs of shoes, including the ones that I just bought for the half marathon, which I completed last weekend. It was
Congratulations.
fun. It was my first one. Got lucky. Got to do it in Savannah, Georgia. Beat my goal. I wanted to do it in under 2 hours. I did it in an hour and 47 minutes. I loved it. It was awesome.
That's
Not going
impressive.
to do it again. I'm old.
No,
My
no,
knees are
not
bad.
next year's not a full marathon goal.
No, no, the full marathon. I don't know that I'll do that. I think I'm going to take up biking. My old
Okay.
knees are starting to bark at me a little bit.
Yeah.
And so, I got the half in. I don't know if we're going to go for a full. We'll
Yeah.
see.
You can always get one of those electric bikes too, right?
You really hit goals on those. Yeah.
You'll smash the goals, man. No
Yeah.
worries. Well,
I would have liked that during the half marathon.
what's next for you? I mean, when you think about the future, let's say 3, 5 years out from now, like what are you focused on to help you stay sharp, to be relevant, to stay ahead of trends? Like, what are the things that you're really zeroing in on right now for the next 3 to 5 years?
Well, that's just it. It's staying relevant, right? I got into this 12 years ago. I was 31 and I felt like a kid. and you hear that if you don't change with the market, if you don't change with technology, if you don't change, you'll get left in the dust. You'll become a dinosaur. And I'll tell you, being born in 1982, I'm a little bit slower to the technology than others. The TikToks, what can be done with AI. So for this coming year, it's really just picking up on those technological trends and putting them to work, using them to my advantage. And we're seeing a lot, especially with AI, that you can implement, from time blocking and scheduling to, just advertisements and content and stuff to throw out there. So really, I mean, in the next 5 years, who knows where we'll be with AI? Right? Who knows what direction that's going to take our industry, what it's going to do to our jobs. I would love to say in 5 years, I'm still going to be originating, right? And I'll be doing it at a higher level, and I'll have 10 AI assistants doing most of my job for me and traveling the world. But staying sharp is really the name of the game, staying on top of those trends, being relevant, being out in front of clients. That way they know that they can come to you for help. So I think that's our biggest task in the coming years.
Yeah, I think it's a great call out. And it really is. It's just about staying on what's relevant and being educated on that. I think technology is clearly evolving at a very fast pace. But we've got to remember that the technology, the AI, I don't think it's there to replace the person. I just think it's there to enhance what the person can do and to make you that much more effective as a service provider, and just give you better tools. So I think that's a great way that you're leveraging it. So to sum things up, or to kind of wrap things up before we end, I guess, is there any bit of advice that you would share that someone out there who's listening might gain some value from, as far as like how to get started or how to get to where you are today? Because you're being very successful. You're in the top 20%, or maybe even higher than that, in the industry, in an industry that struggled for the last couple of years to try and find some solid footing and actually grow their business. So like what advice would you give a loan officer today on how to grow?
Yeah, I mean, it's just like, in football or any other sport, it's blocking and tackling, right? It's the basics, right? So if you have a good core in your basics, what you do with your time. Time is the only thing that's in limited supply, right? Creativity, unlimited. Everything else, unlimited. Time is limited. So if I was coaching somebody up right now, especially with the advent of AI, is figure out ways to utilize AI to give yourself more time to bring in business. And so that's what I'm using it for currently, really structuring time blocking and what to do with that time to make it the most efficient that it can be in pulling in the business. I think that, that's the hardest thing for LOs, is finding that balance. We're in a career field where the more input, the more effort we give, the more we're going to get back out. So figuring out exactly your mousetrap, what works in your life, right? Both personal and professional, how many hours you can give to it, and then maximizing the efficiency of the hours that you're putting in to the work. So, being very honest with yourself, if you're setting up coffees every day, but you're not getting any business out of that, stop setting up coffees. You're not good at it. Do something else, right? If you're, cold calling and it's not working, it's not bringing in the realtors, go find them organically. Go to an event that they're at and try something in person. It's, sitting down and doing an honest assessment of your skills and attributes and how you are spending your time and what things are bringing in more business and what things are not bringing in more business. And then hyper focusing on the things that do, right? Because that's going to be your competitive advantage. And every LO is built differently. It's one of the great things about our industry. We're not all the same. We're not built the same way. What works for Jarad Brown may not work for you and what you do, but doing whatever you do to the best of your ability should bring in more business.
Yeah, I love that. It's highest and best use of your time. Focus on what you're good at and just stay in your zone of genius. Figure out ways to hire people to do the other things that you don't want to do, that you're not good at, and just like everybody stay in their lane. And that's that's one way to scale really effectively.
Yeah. And circling back, I mean, having that mentor, if there's somebody that you have access to that is where you want to be, that person wants to bring you up.
Mm-hmm.
I think most LOs, most quality LOs, understand that there's enough business to go around. I'm in competition with Jarad Brown. I'm in competition with my goals that I set for myself. There's enough business out there that there's no reason for me not to reach my goals, no matter how many LOs are in my market, right? And so you always want to reach down and help pull the next person up, right? So if you see somebody that's where you want to be, go on and connect with them. Conversations with the LOs have helped me in all aspects of what I do. I reach back to LOs that, I used to work with still. And I'm like, hey, you were doing this on social media. How do I do that? Right? Like, what is that at CapCut? Can you please teach me CapCut? How does that work? Right? And they're more than happy to, because they've already figured it out. Right? And now they get to teach Jarad something. Right? And they might call me old or whatever they want to do, but I then get the value from that. Right? So have a mentor that's already there, that's already gone through it. Listen to that mentor, call them, text them, and never be afraid to reach out. I mean, I'm opening it up to any of your listeners. If they have a question, they want to reach out to me directly. I'm very easily found on Google. Just Google me up. I'll probably sit here and talk to you for 30 minutes.
Awesome, man. Well, Jarad, I appreciate you being on the lowdown, sharing everything that you've
I
shared.
appreciate you having me on.
Absolutely, man. It was a pleasure, and best of luck to you in the future, man.
For sure. Thank you, Connor.
You bet.